Hello, Warriors. Dale Pinkert here at TradeGateHub.com. Invite everyone to come and join us. Bring your work, bring your charts, interact. So I have a saying, don't isolate, collaborate. Surround yourself with traders better than you and you'll rise to their level. And we're creating a mastermind community here at TradeGateHub.com. I just want to go over what I talked about on Monday. I was looking for a recovery, reflex rallies in S&Ps. So this was Monday. And I was talking about 46.45, which seemed ambitious down here. And we actually stretched it all the way to 88.6, which is much further than I thought we would go. But the call for a reflex rally was correct there also. I was looking for a reflex rally in WTI, which also happened from here. I thought we might get to 74, 75. Still possible, but you know, this 3 drive is pretty classic. You could take a picture. That recovered. The only dud, and I was able to, just pull 10 cents out of it. I'm flat right now. It just takes a lot of patience. Is that I thought we would rally back towards 23.50 in silver. So far, that hasn't happened. We haven't negated it yet by flushing to new lows, and same with gold. So, they're taking their time. Gold has a little better angle to the upside, and I still think 1810 is possible. I'm not ready to short it, and part of the reason is the dollar looks like it's primed for a pullback here. That this looks like an A with a failing rally B, and now we could perhaps get a pullback towards this 95 level, which could take euro back towards this 114, 115 levels. So this is really what you have. We had the first rally off 1170, and we've pulled back here for a B, and now we could get a C. For the euro to reverse trend, and I don't expect that to happen, I'd need to see closes back over 115. Okay, so it's even possible we could rally back to this major support that now is major resistance back at 115 before we head for one more low. Now, this low was not that far away from my 110 level that I'm looking for a final low. So this may be the last bounce before one flush. And as I said, for position traders, I believe a year from now, it's not going to make any difference if you paid 113 or 114 or bought the bottom at 110, that we're going to see a sharply higher euro. And, I'm looking for a peak in the dollar. I've been talking 97.5 for a long time. So what we're going to get here is one more correction before the push to new highs. Okay. So one more pullback in here, then the push to new highs. I'm looking for about 98. And if you take my RSI work seriously, this was a confirmed high in the dollar up here on the daily, right? So confirmed highs normally are not the top. It could be a top for a corrective move, which is what we're getting. And there could be another 100 points down here, another 100 so higher in the euro from where we are. Even the pound is starting to approach long-term buy zones. I was thinking we could trade under the big round number, 130, and put in some kind of low here around this blue line. It looks like cable is headed towards there, and I want to be a buyer. A lot of people are saying they think that Aussie has bottomed. I can say that Aussie's putting in a great week. It was a strength. I don't believe it's a bottom. I believe it's a bounce from the bottom. This is the opposite technical RSI setup compared to what I just showed you with the dollar. At the lows in Aussie, we confirmed that low, which means that the probability of this being a very, very important low for a major bottom isn't that high. So, I actually think we could trade. What was the low here? We were under 70 by a little bit. Where was that? 69.93. So you have some people buying the big round number at 70. I'm looking for 68 to 66 before this is done. We could rally a bit more during this correction in the dollar, and then I expect one more slam in Aussie sub 70 for long-term buys. And I'm bringing in Peter Goodburn tomorrow. So if you hear the video today, mark your calendar. And Peter is looking for a very significant high in the dollar. The S&Ps might be cloudy, but something that he has a lot of conviction on, and he's been pretty good at looking at these cycles that we have coming up in the dollar. And what he's projecting is, and one of the biggest risks for 2022 in Peter's view, and I've always believed this was a bear market rally, just a retracement of the COVID decline, and that we could head into a pretty serious decline. Just equality from here, say we get to 98, could take you down to the 85, 82 level. And I think some of the biggest opportunities in 2022 are going to come from the FX market fading the dollar against a majority of other fiats, as well as that's when I believe the metals will really kick in, is after the dollar finally peaks and we enter a serious bear market in the dollar, which is what I'm looking for in 2022. The jury will be out on how all asset classes react to it. Traditionally, or at least over the last several years, a weak dollar has meant risk on. Although this year we had a strong dollar, or at least a recovering dollar, and it really didn't bother equities at all. So S&Ps, take a look at the NASDAQ here. I still think there's a chance for a surprise into the solstice, a very important GAN day, with a lot of things happening that week of Christmas. I believe you have ECB, you're going to have the Fed, right? So you're going to have a lot of central bank action. You're going to have a GAN day, which is the change of seasons. And I think that we could see another wave down. This rally in NASDAQ retraced in between the 61.8 and didn't quite get to 78.6, compared to S&Ps, which are giving up the ghost right now, got all the way to 88.6. And then you look at something like the Russell, which didn't even fill the gap. All right, so it never even filled the gap. So it's possible that instead of a Santa rally, we sell off into Christmas, which would have the market wrong-footed looking for the Santa rally. And then maybe the bears get to feast. They feasted on Thanksgiving. Maybe they get to have a snack on Christmas too. Maybe some Christmas cookies. We'll be waiting for the bears a few days before Christmas. But this action is not positive. I had all these weekly lines drawn. I'd say that the Russell is the biggest disappointment, especially for people that waited since last March for a breakout, And, I've talked about sometimes the first breakout is a fake out, and, this was a huge move. Now in here, I thought we were going to roll over, but once we had the breakout, the fact that it came back and started closing back underneath the breakout isn't such a healthy sign. We have a gap above the market, so there could be some more downside in IWM going into month end. So I think we're getting we're going to have a pretty good sell-off, and this was just, like I said on Monday, a reflex rally. And this too in crude, which is even weaker, even though it's a nice rally, compare the response in WTI, which led this decline, was less than 50%. And I don't believe these 62 lows are going to hold, and we're on our way to new highs. We could replicate something like this from wherever WTI fails. I did want to show what's driving weakness in the precious metals. And I do think there's going to be major buying opportunities when the dollar peaks with miners and gold. But this is what's ruling the day right now. You have this formation. You have the 10-year yield. Go to 4-hour. And you see this little head and shoulders formation, and we're breaking out. Okay, so I mean, this breakout alone measures back to the highs. And its companion and soulmate, which is the Japanese yen, look at this formation and compare it to this formation. Very similar yields and Japanese yen. And so the yen looks pretty good too. I expect it to challenge these highs and take them out for a potential 3 drive to a top formation, which, you know, we already diverged at the last high. If we had another high up here towards 116, I think that might be it. And once the yen peaks, should this scenario play out, and we get one more high in the yen and yields push up towards, 190, 2%, that should be the time zone that we're looking at buying opportunities in silver and gold. Okay, so I want to wait for yields and the dollar to top before wading back into the long side. I tried the scalp this week and I'm just not impressed. It's been 4 days just sitting here. But you know what? Sometimes I lose patience with a trade, then it happens once I liquidate my position. So you could probably get long 10,000 silver here for the rally to 23.5. But after a few days, if markets aren't performing, to me, it's more of a signal that what I thought was going to happen, especially since we had that big recovery in risk through the stock market, and we had a big recovery in crude, and now the dollar is even weakening a little bit, and the best the silver could do is be down 12 cents. I'm not impressed. So patience with that. I also want to comment on this in the VIX, regardless of market direction. This is a market when we could go from, in a couple of weeks, all right, a month, from 15 in the VIX to 34, and then back to 22, is a sign of, I think, a shaky market structure. And this was another 1, 2, 3 in VIX. So I did see this Monday as the volatility playing out and was expecting a pullback in the VIX. So now we're going to see, hasn't filled the gap yet. We'll see, maybe we get a break in the market. What would be a bullish sign for me would be to have a pretty good break in the market that retests or takes out these lows, and the VIX not be able to make a new high, put in a lower high, maybe up here around 32, into the solstice, into the Fed, into the ECB. So trade lightly right now and have some firepower ready for that week. I've seen a lot of major turns on the solstice, and then we're close to the beginning of the new year. So there could be some very interesting turning points occurring there. In the meantime, I think that the upside is intact. Maybe the yen gets to new highs by then. We're a couple weeks away. Perhaps gold gets close to finishing its decline, and perhaps the markets here might be through with their corrective phase, and a lot of the bulls, for example, David, who I had on here, looking for a melt up next year into the first quarter or so, 5,300 or higher in S&P. So if we flush into late December, that would be a pretty good buying opportunity. I just want to show Apple because I'm taking a lot of heat. Talking about a 3 drive formation, I mean, it's only a stock, guys. you know, and I'm talking about, you know, that this is diverging for the second time here. So I know a lot of people are going for 200 in Apple, and I'm just pointing it out that we have, you know, confirmed high, divergent high, and here we are, but it was over 70, and now here we are at 172 or so, and the RSI is still under 70. I'm not saying go out and short it, but Bernard Baruch said, you never go broke taking profits. Nothing wrong with ringing the register if it goes to 200, even if it's going to go to 200, could still get a pullback from this 3. So that's your leading stock in the NASDAQ right now. Netflix, you know, doesn't look that impressive to me. The recovery in NASDAQ was much better. Microsoft put in a nice little attempt at rallying, but, you know, less than the NASDAQ 100. So, you know, there are certain sectors that don't look great. Amazon, I guess, looks a little better. It's acting okay. Even Tesla, you know, not much of a recovery. Still looks kind of heavy. Here's Facebook. You know, just some type of fib retracement so far from the decline that we had into late last week. And Google, a lot of people like Google, you know, could make a new high. So, you know, that's the way it looks to me. I would watch what's happening in the bond markets. This is the corporate sector. We're putting in lower highs, and the junk is actually acting a little better right here than the corporate investment grade bonds. It is a time to be, you know, looking for weakness in the grains. You know, we had this bottom in the beans at 1180. I don't know if we're going to trade there again, but, you know, I believe that accumulating agricultural commodities is going to be a good play, especially once the dollar turns. You know, tightening rates isn't going to bring down grain prices. You can't print it. So most agricultural commodities, I think, are excellent buying opportunities on weakness into early next year. But you don't have to worry about that today because, you know, I'll be with you guys. Don't forget to tune in tomorrow because I'm going to be covering the dollar, putting a microscope, telescope, everything on the dollar for next year, and going to be asking about perhaps some exotics. You know, could it be the ruble? Could it be the real? You know, what could be even more, have a higher performance than the dollar declining against the euro? So, you know, be around. And also, if you have some questions for Peter on any of his counts or what he's talking about, you could always just be right here in chat and just type it out, and I'll ask Peter for you. So remember, above everything, don't just count your pips, count your blessings. I'll see you tomorrow for TradeGate Hub's interview with Peter Goodburn. Have a great day trading, everybody, and I'll see everyone tomorrow. Adios.